Hello, everyone, and welcome. Thank you for joining us today for this very exciting conversation. This event is part of World Salon X Columbia Global Dialogue Club series, and today's talk is called Hype versus Reality: What LLMs Really Mean for the Future of Finance. In this Fireside series, we will explore the responsible use of generative AI in the world of finance. My name is Ignacio Garbacho, and I'm very happy to be here with such a brilliant group of speakers. Before starting a bit about me, I'm director at PCMI, where I focus on alternative finance and fintech for development. I work extensively on payments and e-commerce trends in Latin America and Asia Pacific, helping companies and institutions to understand how to build inclusive and responsible financial system. My academic background, along with this hands-on research on digital wallets, consumer payments, financial well-being, has given me kind of front seat to the evolution of fintechs and the complex challenges around regulation and compliance in the age of AI. So basically, I speak with the companies, and I listen to them every day in terms of their fears and what are they looking for through this technology. Today, I will also help guide the panel discussion. That means that I will ask some of the key questions and help to make sure that the conversation flows smoothly. But first and before starting, let's get to know our amazing panel. I'd like to invite each of you to briefly introduce yourself. So let's begin with you, Dr. Sterling Thomas. Could you please introduce yourself and tell us a little bit about your work?
Yeah, thank you. I appreciate it. So, yes, hello. My name is Sterling Thomas. I am the Chief Scientist for the U.S. Government Accountability Office. We support the U.S. Congress in any of the science and technology issues that they have, as well as really helping them understand how AI is being used within the U.S. government. My background is in mathematics and genetics, and I've been working in machine learning and AI for decades. But the new, discovery of and really implementation of large language models has been a really exciting time for us, and certainly looking at how it can be implemented in government finance as well as private finance and fraud. And so I'm looking forward to a really good discussion.
That's amazing. Great to have you here. Next, we have Dr. Janet Bastiman. Dear Janet, would you mind telling us a little bit more about your work and what brings you to this discussion, this conversation?
Of course. Hello, everyone. Janet Bastiman. I'm Chief Data Scientist at Napier AI. We're a regulatory technology firm providing compliance software to financial institutions and regulators as well worldwide. I spend most of my day job is research and development on complex AI solutions and sort of data analysis and speaking to clients about their requirements and needs. A lot of those discussions have revolved very recently around LLMs. So it's a pleasure to be here to talk about that. I'm also part of the Financial Conduct Authority's Synthetic Data Expert Group. And within the UK, with the Royal Statistical Society, I'm chair of the Data Science and AI section and also vice chair of the AI Task Force. So I'm constantly looking at sort of regulations and how best we can work together to make the best use of all of these emerging technologies.
That's fantastic. Thank you so much, Janet. And we are also joined by Elizabeth Callan. Elizabeth, please share a bit about your background and your focus in the AI and finance space.
Sure, thank you. Elizabeth Callan. So I'm currently the subject matter expert for innovation and strategy with Symphony AI. We are a solutions company for everything financial crimes and sanctions compliance and risk management. Prior to Symphony, I've really been in anti-money laundering and financial crimes for almost 25 years. A big part of that was spent with the U.S. government, including the Department of Treasury, and then within the intelligence and law enforcement communities. Within the private sector, I've worked across financial institutions and consulting, everything from managing investigative teams to developing operating models and program design for financial institutions. So very happy to be here.
Awesome. Welcome. And last but not least, we have the honor of having here today Kay Marvin. If you could please introduce yourself as well and tell us a little bit about your work.
Hi, sure. So my name is Kay Marvin. I'm the global MLRO of Warburg Pincus. Warburg Pincus is a private equity firm. It's a large one. So we have offices in the US, Brazil, UK, Europe, China, Japan, Singapore, Dubai, and have funds and corporate entities in the Cayman Islands and Amsterdam and Mauritius and lots of other places with various AML regulations and sanctions considerations. So what my job is I run and implement, develop, implement, and run the global AML program and sanctions program, as well as anti-bribery, anti-corruption. This involves looking at our investors and investor base. It involves looking at the jurisdictions in which we operate, both whether that's offering funds or structuring or considerations for private equity investments. So private equity investment, we have a global strategy. So we invest in companies and strategies all over the world. And so that requires a lot of moving pieces from an AML sanctions standpoint. Prior to coming to Warburg, I was at Brown Brothers Harriman, which is a private bank. So that was more on the transactional side. And I also ran private funds and a Lux administrator there and a Cayman branch of our bank, as well as prior to that, I was at a firm called Ares Management, which was a large public investment advisor with various strategies and also a global strategy. Doing pretty much the same thing, running, developing and running their AML program on the practical day-to-day level.
That's amazing. Awesome. So as you can see, this is a great panel. To all of you attending today, feel free to ask questions or share any kind of comments at any time during this session. You can use the Q&A tab on the right to post your thoughts. We will be keeping an eye on it, but we will also leave 5 to 10 minutes at the end for an open questions from the audience, right? So let's move into our discussion section now. I will start with my own topic first, and the idea is to set the stage for the specialists that are joining this discussion. So again, as someone who has spent the last decade or more studying how technology can drive financial inclusion, I'd like to begin. I thought kicking off this conversation by framing today's discussion with a simple but powerful idea, which is that AI and particularly LLMs, they hold a revolutionary potential for inclusion, but that potential will not materialize on its own, and it will depend on how we train them, and of course, mostly the choices that we make now, that we make today, from how we design policies and infrastructure to how we train model and build trust with users, and of course, assigning responsibilities. So to the question of how can LLMs be leveraged to enhance access to financial services while ensuring compliance and mitigating risk in this new AI-driven fintech ecosystem, let me unpack this in four key points. So the first one is, of course, that LLMs and broader AI tools, they can dramatically reduce cost for financial services. I mean, they are already doing that, but there is still much more to do. One of the major obstacles to financial inclusion has always been the cost to serve, cost to acquire, cost to underwrite. And what we see is that in markets like India, where we already, I'm thinking in India, but we can also speak about Brazil and PIGS recently, we have seen how the onboarding of the client has drastically diminished. In India, was something around $12 per customer to just cent. So add AI to the mix of this digital financial revolution, and especially the LLMs for onboarding, KYC, customer support, and you unlock even much more savings, which of course will transform this not just in an automation of the processes, but a cost transformation at scale. So that's my first point. The second point is that LLMs can make financial products more relevant for the excluded and included, but supercharge the hyper-personalization phenomenon that we are seeing. So for decades, as we know, we have offered the same generic savings and loan product to everyone. We can say that savings and payments are more or less, we have much more than the half of the population, 3 out of 4, using any kind of digital payments or at least digital saving. But for lending, that's not the reality right now. So the model of offering the same generic kind of product doesn't work for informal workers, smallholders, farmers, or micro entrepreneurs. And AI might change that. With the right data and design, of course, LLMs can support conversational interfaces that work across languages, across literacy levels, across devices. Just think of a WhatsApp-style interaction that helps rural users to access a microloan or receive agricultural advice in their own dialect. So we are already seeing this in action. I can think in firms like Farmer Chat by Digital Green or Fairbank's Embedded Financial here in the Southeast Asia. So these tools are already root deep, real-time understanding of user cash flows. And that brings me to the third point. And the third point of my four points is that, and I believe that this is where the stakes get higher. LLMs can finally, and hopefully, and we'll see, of course, this is a promise, but they can help to bridge the information asymmetries, particularly for the millions who still remain excluded from traditional credit scoring systems. So the alternative scoring revolution has been around for a long time. I always say that it is kind of the Coca-Cola formula, like no one's know very well what they are doing, but the promise is that with data analytics, we will be able to predict, the profile of our customers and then open the door to the financial system. But the truth is that by analyzing alternative data, such as mobile money transactions, utility bills, or even supply chain flows, AI can help to assess credit worthiness for low-income individuals and more importantly than that, in my opinion, for micro SMEs. So in places like India, fintechs like Karma with the buy now, pay later revolution around the world is a showcase of this. They're already providing that transactional data can match the predictive power of formal credit histories. And again, this is critical because even if we forget individuals, there is a 5 trillion financing gap for micro SMEs globally. So it's a huge missed opportunity for inclusive growth. And my fourth point, this is my last point, but something that I think will be much more relevant in this panel, is that we need to talk about risks. AI doesn't just amplify the opportunities, it amplifies also the risk, especially for the most vulnerable. Fraud, deepfakes, misinformation, bias in data, these are not abstract issues. So if I'm not sure if any of you guys or if the audience remember when Apple Card launched their Apple Card and financing product. Do you remember that situation when the social network just full up of stories and cases of people that have or even bigger salaries than the other one, but because she was a woman, the interest rate was much more harder. Or this co-worker that used to work, both of them in Manhattan for the same company, one of them had higher income and more asset, but he lives in this kind of more dangerous neighborhood. So the algorithm just punish him and give him a huge interest rate. Again, low income users often have the least digital literacy and the fewest protection. So if an LLM is trained on biased data or makes opaque decisions, it can, of course, easily perpetuate the exclusion or even cause harm. So we already know that underserved group, especially women, underrepresented rural segment. I'm thinking on aged people as well, or youngest population. So those are the segments that are still excluded in deeper financial inclusion degrees. But without diverse and high quality data, the best algorithms in the world will still fail short, or worse, they will misfare. So what's the path forward? We need, and this is like my conclusion, we need intentional design, inclusive data ecosystem, strong regulatory frameworks, and perhaps, and most critically, share responsibility. But those are my opinions, and this brings us directly to what the next speaker will discuss, because the ethical implication of AI is not just a technical problem, it is a governance issue. So we'll go through Janet, through Elizabeth, through Kay, and then through you, Dr. Thomas, in order to bring some light over this point. And again, feel free of discuss any one of my 4 points, or send your questions in the Q&A, and we will answer them once possible. So Janet, given your deep expertise in AI ethics and governance, what do you think about the strategy that can financial institutions implement to prevent LLMs from generating misleading or incorrect financial information, especially when decisions are high stakes?
Thank you. I think the key part here is the risk side of it. Particularly from my background, looking at sort of financial crime compliance, all of those processes involve some degree of risk for existing processes of human agents, and we mitigate that through various checks and balances to ensure that any risk of misinformation or breaches is minimized as far as possible. Humans do make mistakes. That's why we have those checks and balances in place, and it's unreasonable to assume that any artificial intelligence would be completely infallible. And all LLMs are liable to misinformation, errors, or a word which I absolutely hate, which is hallucinations, because it makes it sound a little bit too far away from wrong. But they are statistical, so they will come up with the wrong things at times. And you need to balance the risk between them making those mistakes and all of the other benefits that they can bring. And we've already heard quite a lot in terms of cost reduction, just in terms of being able to deal with vast amounts of data and things like that, where you have human teams that literally can't get through all of that work. And that's the important balance. So I have sort of 3 criteria for evaluation of using any AI system, but particularly sort of LLMs. So firstly, the sensitivity of the data, the regulatory exposure of the process, and then finally the risk tolerance of that process. When it comes to talking to people about using LLMs sort of in production, the sensitivity of the data is usually the limiting factor. So commercial LLMs quite often can't be used, particularly in UK and Europe. There are some quite strong restrictions on where data can be passed for processing. So even if you have a financial institution that is happy to have a SaaS product in a virtual private cloud, and even if that cloud provider has a commercially available LLM, you normally can't use it. So that either becomes a situation where you just don't use large language models for sensitive data, which immediately restricts all of your use cases, or as we're starting to see, you host your own, whether that's a large language model or one of the smaller open source ones within a permitted network, but then you've got all of the associated costs and upkeep, and it's that upkeep, the monitoring, the validation, the testing, mitigating of bias, as we just heard, that's hugely underestimated. And even if you get past all of those initial checks, the models can then run with this air of correctness that's generally unwarranted, because as the data changes under it, they'll get further and further away from the truth. The other point to note, when particularly with commercial LLMs, they have been trained on mostly open source data, but very little of that is actually recent financial data. There are some decades old samples that are around that have been used, and obviously sort of company records and sort of end of year reports that are in the public domain, as well as news that's in various media. None of that could be considered unbiased sources. It's not that clean, curated, labeled data set that we all want as data scientists, and inferences have been made. And when you feed that sort of data into these language models, they will come up with correlations and assumptions based on how they piece all of that information together. And even when you require references to make sure that the data that they're giving you is precise, those references can sometimes be incorrect and possibly more worryingly, based on our relationship with all these types of AI, quite often the human agents don't check the references. They just see that there is a reference and then defer the trust based on it, which can be quite dangerous. So finance, particularly if you agree with stereotypes, and we've just heard a few of them, but even extrapolating that further, a lot of the transaction patterns of some of the poorest in society, in people that are working multiple jobs, people that have quite burstable income and expenditure, who don't follow the pattern of your standard middle class sort of normal employed sort of income, they can quite often be flagged up and correlated with the unusual behaviours that you would associate with, for example, money laundering. And those are the very people that you don't want to block transactions and don't want to block accounts, because if they're without money for a few days, that can literally be a life and death situation for them. So when you're looking at risk and bias in your data and your systems, you've really got to focus on what is the worst possible outcome, and then let all of these models do the heavy lifting in the areas where that risk is a lot lower. And that's the only way to ensure that we've got a decent ethical framework. The regulatory exposure is currently all over the place worldwide. We have some regions where it's permitted to fully automate all of these things, and you have other regions where it's specifically prohibited for any high risk situation. And that is rapidly evolving. We're seeing various regions take a step back, see what others are doing, what's working, and then adjust accordingly. We are also seeing fines for financial non-compliance get larger and larger year on year. So there's definitely that focus on preventing and detecting, which is where these models can help with. But there's a high price to pay if you miss the signs that you should have got through other mechanisms. So we do have systems that are at all these levels of financial crime using other sorts of automation. That's been there for a while. We know that the people that we're trying to detect are using as much AI as they can get their hands on, because they're working outside of regulatory frameworks themselves. All of the usual tells for fraud are starting to disappear. So, large language models are being used to craft the perfect emails, to craft the perfect fraudulent websites, to create transaction patterns that we can't spot using traditional means. So we need to use these tools in order to keep up with the people we're trying to detect. But we need to do it within that legislation and within that risk framework. So from a focus to make sure that we're doing this ethically, there are frameworks that exist. The IEEE, their 7000 standard series, gives you guidance on good ethical frameworks, and they're not the only ones by any means, to make sure that when you're building these models and using these models, you're really baking in the correct ways of designing them from the beginning, making sure that they're auditable, that they're understandable at the right level, and that those outcomes can be properly audited and explained, so that if you do have a suspicious activity report that goes to any sort of law enforcement, you can really stand behind that output. And that's absolutely key. So, that said, we've already heard of some great examples of how we can use large language models. That natural language interaction with the data and dealing with things in your own language is huge, particularly with sort of global finance records, global adverse media. Really gathering all of that together in a way that can be understood quickly is absolutely critical. And I've seen some use cases where for a single complex entity, just using these tools can save hundreds of hours of human labor. And that's the sort of thing that, if there is criminal activity, you just wouldn't be able to deal with that information in time. So when it does come to using this for full automation, which I know a lot of people really want to do, you need to have that auditable chain of thought, the reasoning, the assurance that the models are performing at least as ethically as a human team, preferably more so. And the implementation need to be built on foundations of trust, both internally within the company, so you've got that confidence and assurance that the models are doing the right things in the right place at the right time, and that the results are as precise as they need to be, but also externally, because a lot of regions have requirements to let your end customers know if you're using automated systems, particularly in finance, and they also need to have that trust. If you're talking to an automated system on the website for all of the good use cases we heard earlier, you ought to know that you're talking to a chatbot, and you ought to know how to speak to a human if you want, so that you're not fooled and you're not confused by the information you get. And if that's done, then it'll be acceptable to the regulators in a much better way, and you'll be able to harness this power, because, as I said earlier, we absolutely need to. We're drowning in the amount of data that we've got, and the amount of financial crime is also increasing year on year. So we have to use these tools, and we have to be effective with their use.
That's great, and I'm absolutely agree and in line. The training of the LLMs is a key factor. Let's jump to you, Elizabeth. Again, given your experience in compliance and policy enforcement, how can financial institutions ensure that adoption of LLMs genuinely strengthens compliance without inadvertently introducing new regulatory vulnerabilities?
Yeah. So this is a very interesting question, especially when you're looking at it from a program level. I think most of this is really about designing and defining a proper governance framework. So what we're seeing a lot of institutions do now is adopt what's called an AI risk committee. So there's lots of other committees, typically in an AML or financial crime program, but we're seeing these being added to oversee the different AI projects that institutions are looking at implementing, the development of these projects, the deployment of any kind of software, either built internally or purchased through a vendor, and then kind of managing that ongoing monitoring and testing when they've decided on technology and they've gone about implementing it. It's also really about clearly defining roles and responsibilities. So I think this is a big one to really understand who's doing what and who's responsible for what. This is obviously something that the regulators look for as well. So you want to make sure that these are in writing. They're easy to share, both internally and externally. So all your internal stakeholders are very well aware of roles and responsibilities, but also those external stakeholders, primarily regulators. Policies and procedures sounds very basic, but absolutely another key element of appropriate governance and risk management. And you want these policies and procedures obviously to be in writing and to really cover a variety of things. So everything from model governance, how the models are retrained and on what cycles. Incident response is another big area. Explainability requirements, Janet mentioned explainability and data. All of that really needs to be well laid out in policies and procedures and well documented. And then I think broadly, you need to stay on top of what your regulators are comfortable with and what they require. Again, I think Janet mentioned this, it's kind of all over the board. I think it varies across jurisdictions, but even within jurisdictions, there's a lot of variation. We've seen some states take some action. We haven't really seen anything in the US at a federal level yet. So you really need to understand what your specific regulators require, and then also what they're comfortable with. And that might sometimes require engagement with them, right? Being very transparent with them and helping them along the learning curve as well. Talking about data, data obviously is very foundational to all of this. So data integrity and lineage is very key. So you want to ensure a level of confidence in your data integrity and your data lineage, reliability around these data sets that are in particular are used for training, but also once these things are put into operations, you want to make sure you understand that lineage. You want to test for bias. This is one of those areas where we've seen several states start to legislate, particularly around bias, and anywhere that AI is being used that could potentially present bias into the equation. Robust lineage tracking, right? So everything we think about with these projects, and not only how AI works, but the outputs of AI, it's really about tracking. So I'll probably say that. You'll probably get sick of hearing me say that in these next few minutes. But tracking is just so important. And again, very key to demonstrate to regulators. But I think it's also because, you're not just trying to convince your regulators, but I think you're trying to help them learn as you go along, right? Because their primary responsibility is not to understand AI, even though it's becoming such a big part of how we do this work, how institutions operate and how they do compliance work, that the regulators are having to start becoming a little bit more experts on this stuff than they otherwise would have thought, in the older days. But it's really not their central role. So I think part of it is really trying to help them understand, but also use all of this tracking and all of this documentation to really, enhance the confidence they have in these products, how they can be risk managed, and the outputs from them. To that point, of course, model transparency and explainability. We always hear a lot about this whenever we talk about AI, but it's just so important to understand, what your models are being used for, that they're auditable, that they're explainable. What are the model inputs? What are the training data sources? What's the overall path to that output? Really looking at every sort of piece of that process and ensuring that it's not only transparent to you, the entity that's looking at bringing on this technology, but again, all of those different internal and external key stakeholders. And then it's also critical to deliver that response if there's any scrutiny, right? So when you're under the gun, that's the last situation you want to be in, where you're sort of frantically trying to explain this stuff and create that transparency with the regulators. So when those situations pop up, you're under regulatory scrutiny or there's some kind of regulatory inquiry, you want to be ready to be able to share this stuff and explain exactly what you're doing and how your software and your solutions are working. Human oversight. This is another key area. So, obviously there's lots of different use cases and reasons to use AI to make things more efficient, right? Doing things very quickly that humans might take a long time to do. But I think there has to be a balance between, the right mix of technology and humans, and where you introduce the human into the loop of any of these processes that you might be using AI for. And sometimes that proper level of balance can be different depending on how you're using the AI, what it's being used for, the level of risk around that sort of use case. So this is all things to keep in mind as you're looking at, either embarking on an AI journey or you're even still in the midst of it and you're, looking at ironing out those wrinkles as you start to confront them throughout that journey. Tests and pilots are another component of this, right? You want to test. Sometimes that requires a pilot even before you bring on this technology. But testing is critical. Sandbox environments where this stuff is isolated are going to provide you sort of that safety to know that you're properly testing without any interference with your day-to-day operations that are currently in process. But also this can help identify and control issues, again, as Jenna mentioned, around hallucinations, missed risks, and a lot of other issues that can come up as you start to implement this type of AI. I think it's also just important to stay close to your vendor. So you really want to get a sense of their philosophy around, their product development, especially as it pertains to things like explainability, responsible AI, how transparent they are with you. I think it's really important to sort of feel comfortable with your vendor, not just in terms of the sophistication of their products, but, are they dedicated to kind of sort of following you through the journey and supporting you with everything you need throughout that implementation journey, but then also during the life cycle of using that technology. They can often help you identify issues and how to solve for them. And they can also help with communication to stakeholders. And this is a really key area because, as I said, regulators are really still learning about this stuff. They're still, not only at the exam level, but also sort of how to craft regulation to, not constrain too much what institutions are able to do and how they're able to use this technology, but also keeping in mind things like bias and other, safety issues and other risks that can pop up by using this type of technology. So engage early and often, help them get comfortable with not only how you're using it, the sort of generative AI, how you're using it. There's lots of different use cases. I don't know if we'll get into that today, but there's lots and lots of different use cases for how to use generative AI throughout a financial institution, but also within a compliance function. So you want to, be very kind of clear in how you're using it, the benefits and risks of those applications, and then, obviously how you're going about managing those risks. This can also, it's really not just about sort of making sure that you're able to use this technology, but, if there's enough communication, again, especially since they're still learning and still looking at how to craft the right legislation and regulation, engaging with the regulators and really being transparent with them can help pave the way for potentially positive regulatory steps. Positive meaning beneficial to, the financial institutions sort of segment, how these entities want to use this without being hamstrung by potentially regulation that's either, sort of miscrafted or, potentially crafted in such a way that it's too restrictive. I think this engagement with regulators can help maybe offer sort of a certain level of understanding that can help that ultimately what the regulation looks like actually be better and potentially more friendly to, what these institutions seek to do with this type of AI. And many vendors will partner with you. So I think that's the other thing that I want to emphasize. I know we at Symphony AI, we really appreciate being able to partner with our customers to talk to their regulators and even internal stakeholders, boards of directors, things like that, where, sort of situational awareness is very important. Socialization of sort of what's going on, how you're looking at using this, what the value, the derived value is going to look like, how that can help change the institution, but also, more broadly, I think we need to look at it from an industry level, right? As the industry, as this sort of AI gets more prevalent across the industry, there's obviously going to be different types of value derived when a broader swath of the industry is using this type of technology and learning from it and getting more efficient with it. So I think there's also that sort of layer to why you want to work with the regulators and why you want your vendor to potentially participate in that kind of engagement with you. So that's where I will leave it there.
That's fantastic. I also reckon we can enter into the use cases debate here because there is a lot to say around that. And I love how you highlighted the role of the vendors and the key relationship and accountability and shared responsibility, of course, that they might have. So, Kay, from your experience implementing global AML and sanctions programs across multiple jurisdictions, how do you see AI-driven tools transforming traditional anti-financial crime frameworks? In which specific areas, such as transactions monitoring or sanction screening, do you believe AI can add the most value?
Sure. There's been a lot of really good points made already, so I will try and focus my answer without being repetitive to what a lot of the panelists have already shared. But one thing I did want to touch on is whenever you design and you implement an AML sanctions, anti-financial crime program, one of the most important pillars is that that program itself is what we say is reasonably designed to ensure compliance, right? And so just like, we just heard about the AI policies and procedures, and the policies and program of using AI itself must be reasonably designed. From my perspective, AI and LLM allows me to ensure that my program is more user-friendly. It is more conducive to having both of our front office, our deal teams who invest in these companies, and our fundraisers who raise money from institutional investors around the world, as well as our operations teams who might be processing these big wires and engaging and doing these financial transactions, the money movement part of it. It enables them to be able to use AI and LLMs to enhance our program so that way that they are able to do their jobs more effectively is the most beneficial tool, in my opinion. So what does that mean? For example, I think a lot of people are very familiar with stuff like sanction screening, negative news screening, transaction monitoring. And yes, we can certainly, with the improvements in AI and dispositioning, we don't have to use like one keyword, or if it's X amount of dollars over this in this time period or to this specific country or something like that. We can kind of tailor and use AI to customize the types of patterns that we would expect to see and be a little bit better on the false positive. Resolutions, although obviously that in and of itself needs to be continuously tested. Where AI is beneficial, for example, in negative news screening, you might get 10 articles. If you're screening somebody and you get 10 articles and none of those 10 articles say anything negative, fine. But if every single one of those articles mentions this business partner that's nowhere in the documents, they're not a director in any of the structure, they're not a known, associate from a FATF perspective, but they're constantly in these articles, and that person has an issue. The AI, as it grows, and will be able to make those secondary and third connections that we would not be able to do simply because we don't have time to do it. They're very, very good at analyzing big data sets. So if you have you've invested in a company and you have quarterly financials, you can AI can pull and let you know instantly if you've got a big chunk more than expected in your risk tolerance from a certain jurisdiction, if they're seeing unexpected revenue, if they've got a consultant that's kind of over and over that you don't really have a clear understanding of what that consultant is doing. That kind of stuff can all be triggered by AI, and AI can learn to escalate that and in a more comprehensive manner so that more of those red flag issues get seen. Additionally, when it comes to training and implementing these policies and programs, I can do a training every 6 months or every time I start a fundraiser or whatever on red flag for this or this, right? But nobody's going to remember every single one of them. If we are able to put, we have a sandboxed LLM for our policies and procedures. So we can put those in and all of our red flags and examples, and people can ask it questions, which are also visible to us so that we can make sure we can see what people are asking, right? To see, what are people understanding, what are people not understanding? And it encourages them to think about that more often. It's a lot easier to type in and get that than to look through an index, go to page 26, and then see all the red flags, et cetera. So that we've found to be very helpful, as well as, our risk-based approach and our risk tolerance. We have for each different strategy, we might have a different risk-based tolerance for each jurisdiction. We might have different red flags to look out for, different hard stops. And so we're able to extract data from documents, from investor presentations, from the marketing side. And when we bring those in from our due diligence questionnaires, as they fill out all this information, we can have all that summarized and given it back to us. And instead of a 52-page document, with paragraphs and paragraphs of information, we can kind of use that tool to pick out certain parts and summarize, what parts we fall within our tolerance and what parts fall without our tolerance. And I think what this does too is it makes better compliance personnel. There's a lot of very routine, very tedious, very same over and over and over tasks when it comes to AML, especially in the KYC portion, especially in the sanctions screening and negative news. You feel like you're closing the same alerts all the time. You've seen every single version of a trust agreement, of a article of incorporation, of a shareholder register that you think might be in existence. And to be able to have, for investors with very, very complex structures, from the old way of having to take everything and flip through the document and at most, OCRing it and searching for certain keywords, if we can now put it in our software system and it can build a structure chart for us and list the directors at every level and automatically, from an AI perspective, just put those people through screening. So you have your screening results right there, that it's already kind of reduced to false positives. You're basically taking what used to be an entire day's worth of work, and now you're starting at the end of that day. And what it does is it enables your junior compliance people to focus and learn the risk tolerance and what are we really looking for, as opposed more conceptual instead of check boxes. And that enables you to allow your junior compliance people to really understand what it is that we're looking for, why what we're doing is important, bring them in on more substantive work, so that increases their, enjoyment of their job and also their ability to, act as a protective barrier for, and detect more actual financial crime instead of, we're missing this one thing, or, somebody doesn't have, this one thing on the checklist that we may still have to get it. Sure, we're always going to have to go back and close out all the transaction alerts. We always have to go back and go through all the sanctions alerts, right? But if the majority of the work becomes more meaningful, I think it'll be easier to retain long-term and train junior compliance personnel who will then bring more value individually, because AI and LLM have done a lot of that groundwork for them. So I think from our perspective, as far as implementation, it really helps both the people on the front office, the people who are getting these customers and who are making these deals and funding them, and our junior people. It really helps to really bring them into the fold and create that culture of compliance, that awareness, more than just, a 5-question quiz. Like, it really brings them and gives them some ownership in the anti-financial crime program. And that, I think, has been very helpful.
Amazing. That's amazing. Thank you. Thank you very much. Okay. And Dr. Thomas, how can LLMs be responsibly integrated into finance, where compliance, interpretability, and systemic risk are critical? Do current safeguards surface, or are new frameworks needed to ensure trustworthy AI in high-stake financial applications?
Yeah, so it's a great question. Before I get into that, though, I'm going to kind of key off of something Kay just said that I think really actually gets into a question that's in the chat that Emily brought up, that is something I've within our agency been thinking of. So we have an AI council similar to what others have already mentioned, and I chair that AI council. And one of the things that we are debating, and this gets to the groundwork thing you said, Kay, that I really liked, is there are a lot of great tools out there, and I'll talk a little bit about the governance frameworks and the way we think about them. But there are tools out there that can deal with a lot of that groundwork. But what we see in our agency is some of that groundwork is actually critically important for our junior staff to do so that they can learn kind of the way our agency does things. Particularly in one of the main things that we do for the executive branch, we work for the legislative branch, but we do this in terms of, we do analysis of the executive branch. We do analysis on programmatic performance. How good is the management of the performance? Is it aligning to the goals? Are they, implementing, reasonable controls? A lot of that work is interview, transcription, coming up with interesting questions, and then based off of those questions, going back and doing more analysis. There are tools that do a lot of transcription analysis, summarization for you. And the debate we're going through right now is, well, how much of that do we actually want to automate? Because we want to still maintain that training experience for our new staff, that many of them are just coming out of school. So it's an interesting question, Emily, you brought up, and I really like that Kay, mentioned some of the same things that we're dealing with within our agency. So anyways, I'll get to the question. So I've got a couple points here. Many of them have already been hit, and I'll just kind of highlight them and add my own little spin. First is, I want a foundational understanding of what LLMs are. And Janet started this really nicely with, this is a statistical thing. Okay? Remember, all of these are based off of non-deterministic algorithms. So what does that mean? That means they're not repeatable. You can't depend on repeating the results. Because of that, we need to just have an understanding that, yes, this is a great tool that can generate some interesting summarization and analysis for us, but we cannot use it in the same way we do some of our other more dependable tools that are absolutely deterministic and always give us the appropriate result. So we just have to think through as we are determining which use cases make sense, that that we are aligning it appropriately. And I think, Janet, you got a good start there. Second is something Elizabeth said with data quality and completeness. When we look at how you could potentially implement these tools in the financial area, it has that data quality and completeness is absolutely critical. At a minimum, you need to understand it, and you have to have well documented it and understanding how you're going to deal with any potential biases, missing data quality issues, so that already non-deterministic error-prone analysis actually produces something that is useful for you at the end. So all of this boils down to, you're probably guessing where I'm going, is human in the loop. It's really important. The users of these tools are people who have the knowledge to be able to look at it and say, hey, wait a second, this doesn't make sense, or this doesn't fit what I was expecting to see. I need to go do some more digging to see if this really is accurate. And so, those limitations really build to how do you make determinations of how to responsibly bring these into finance, and then of course with compliance. Let's talk about frameworks. I'm glad you brought it up there. Someone already brought up some of the international ones within the U.S. Some of the ones that we think are critically important. The National Institute of Standards and Technology, NIST, out of the Department of Commerce, has one that's been out for a few years, the AI Risk Management Framework. I think it's a great starting point. That is one that I recommend that we use, that organizations use. The Google SAIF, which is the Secure AI Framework, is another great one. It builds on several of the same ideas that the NIST AI Risk Management Framework provides. And then there's a third one that's come out of Stanford that I think is Responsible AI. Again, you'll see a lot of similarities there. And so these are all great tools for you to think through. And the reason I like the NIST Risk Management Framework is it is based off of risk acceptance and risk analysis, is ways to build governance systems within your organization to understand how you actually want to use it. If you're on the auditing side like us, we have the GAO AI framework, I think it's called, is basically the guide that we use to do AI auditing. And so there's another tool. So the rest of the ones I talked about are frameworks that are great for building your governance model and making sure you're making good decisions. The framework that we provide is really along the lines of how you audit it and evaluate it. And so that's another great tool that's out there. I like that several of the previous speakers brought up transparency. AI is not transparent. By definition, the types of analyses that are being done, they're extensions of artificial neural networks that are using this new type of model that came out about 7 years ago. It's a black box model, but there are places where you can be transparent, and several of the speakers already mentioned it. Data, documentation, how you're using it, what are the inputs, what are the outputs, what are the guardrails, meaning what are the expected input outputs, and what point do we know our data just doesn't support analysis. So introducing transparency and documenting that where you can. The last couple of things I'll mention, really a concept that has come up in the last year that I think is really important is alignment. Alignment has to do with how your automated governance tools and guardrails have been implemented in your actual tool. A lot of the vendors provide interfaces that have built-in alignment. There is now a community of white hat analysts, data scientists who are trying to test that alignment. This is an important concept that I think you want to get into and study. And what it comes down to is the AI performing in the way that it's supposed to, and is it not giving results that we already know are erroneous and that we should be filtering out? And so alignment's an important area to get into. The very last thing I'll say, because I know we're basically out of time, is let me talk about some people brought up regulation. I'll talk about regulation within the US. There is not a lot of appetite for regulation in the AI space within the US government right now. I anticipate you're only going to see regulation that is reactive, meaning that something's happened that gets a lot of people's attention and they'll potentially implement regulation there. A great guide for you to start with and kind of thinking where this administration is going is the Executive Order 14179 that came out in February. It oversees the OMB memos that came out just recently, I think 2 weeks ago, that talk about how the US government's going to implement AI. And there's important documents because the US government, just in 2023, which is the last year that we have audited data for, they invested about $1.9 billion in AI tools and AI development. So there's a lot of investment from the US federal government going into this. But if you read that executive order and you read the Office of Management Budget memos, you'll see the overarching principle is empowering innovation. So basically it says if there are any regulations that are inhibiting innovation reasonably, they should be ignored or removed. And so I think that is a good kind of way to think about where regulation is going for this current administration and the current Congress, which is going on right now. So I think there's a lot of opportunity to innovate there, but that does put a lot of responsibility within your organizations to think through how best to implement it for your stakeholders and your customers or your clients. And that's kind of the guidance that I give people. With that, I'll stop. I know we've got a couple minutes left and I appreciate the time and happy to discuss anything else further.
Thank you so much, Thomas. We are pretty much running out of time, but we have several questions here from the audience. So I will jump between the questions from the audience and our particular question. If any one of you guys want to add something on what the other speaker said, please feel free of doing so. But there is a very interesting one here. Let's see who wants to answer this. Jason asks, in deploying LLMs for tasks like fraud detection and compliance, how can financial institutions balance the benefits of automation with the need for human oversight to prevent over-reliance on AI systems?
I can take a swing at this, and I'll take a swing at it just because AI and fraud is something that I work closely with Congress on, and it's different than private industry because the government's fraud and improper payment challenges are just different. But one of the things that we think through about this is that, we look at, and if you ever really want to be super bored, I testified about this in front of the Joint Economic Committee, I think a couple of weeks ago or a week ago. And I talk about the importance of understanding what the false positives and false negatives mean. What does that mean? That means if you're wrong about something, meaning that you've identified something as fraud, but it's not fraud, what happens? Well, that means that somebody who is dependent upon that transaction for happening doesn't get it, and you have to go through and resolve that. And so when you're thinking through how you're actually implementing these tools, you have to balance that automation. Are we willing to build enough controls in that we're pretty sure the false positives don't happen, so we're not stopping someone from receiving their say Social Security check or their payment for work already completed for the government. The other side is also important. How do you deal with your false negatives? False negatives meaning that there is fraud, but your LLM and your analysis tool didn't identify it. Well, that's money out the door that you then try to have to recover, which is very expensive. And so having that foundational understanding of what are the impacts of errors that you could make with any type of automated tool, and how the human oversight could potentially protect against those errors or at least mitigate them, is a great way to think through, am I becoming developing over reliance on AI and automation? And that's the advice I give Congress. Whether they take it or not, I don't know, but certainly that's the standard that we're trying to follow at the GAO.
I think just really quickly, what I would add to that is, some of it's going to depend on your risk appetite. So I think it's really important for institutions to really have a firm understanding of their risk appetite, because like Sterling just said, I mean, some of this, if there's too much automation, you can miss risk. If you're looking for every single risk under every, different little, potential area where you might be looking at risk, every single transaction, every single customer, then that's just probably too much time invested. So, I think it's important for institutions to understand what their risk appetite is, and then try to strike that balance between automation for efficiency, but also effectiveness according to that kind of risk appetite.
I think
Awesome.
multiple reviewers of multiple systems is a help here. If you have an AI system overlaying onto your doing surveillance on your electronic communications, your WhatsApp messages, your firm emails, your team stuff, and those are being detected and going to one team, and then you have other AI systems that are handled and being overseen and overviewed by other teams, you have that kind of overlapping human element. So as things are escalated and different teams at the same level of oversight and expertise are automating, that their pieces, you're going to have that Venn diagram in the middle where one could catch something and the other couldn't, or could spark an investigation to another area. So you want to build in some redundancy from a practical perspective for fraud, for anti-corruption, AML, QSC, sanctions, and make sure that not one person is in charge of reviewing every single AI program that's running, because that's just not possible to catch every incorrect, false positive, or negative.
Fantastic. Yeah, I would add from our conversations with the companies that they are going slow pretty much because of that. I mean, once you go to medium-sized firms, they, even when they know that they can implement AI for the whole process, they like to start, with small steps. There's another question here from our audience that I would like. I mean, this has been kind of touched, but I would like to listen your general opinion. With the rapid adoption of LLMs in finance, what measures should regulators implement to address potential systemic risks associated with model biases and data privacy concerns?
I think I can make a start on this one. So, I mean, there's plenty of legislation that already exists for data privacy. Over here, sort of in the UK, we've got Data Protection Act. You've got the GDPR for anyone that's European citizen, and that's all very, very strict on what you can do with data. Again, like a lot of legislation, it does vary worldwide, but I think the regulators are looking at each other and seeing what's working and what isn't. So I would expect some homogenization of that level of regulation when it comes to data privacy sort of over the coming years. For model biases, it's a bit more Wild West. There has been a lot of reliance on individual vendors and implementers doing their own thing, and therefore the people buying those models to validate that everything is okay, or if you're building in-house to make sure that those things are fine. That's no longer good enough for the regulators, and we are starting to see not clearer guidance on specifics, but making sure that the testing and the output is done correctly. I think that's probably a good thing, because if it focuses too much on anything that's too technical, then it will become sort of redundant and obsolete very, very quickly. And where people have talked about specific model types, specific architectures, and specific types of data. By the time the ink's dried, we've already moved on. I mean, if you think of how quickly LLMs have come out in the scheme of things and the different underlying architectures, there's a lot there. What I do think they should be looking at, and it's one of the things that I'm advocating quite a lot here in the UK, is the statistical rigor and the process around the testing, the validation, and making sure that those unwanted correlations aren't there. Removing all of those key trigger points from the data that shouldn't have a bearing on any of the outcomes, and seeing if you still get similar outcomes. It's one of the reasons that the FCA are working with me and various others in the Turing Institute, for example, to try and put together this synthetic data set so that we can have a really clear set of example data that includes financial crime typologies, but isn't biased, so it can be used as almost a starting point for a lot of testing and validation of these models, just to see what it does and doesn't come out with. But I think the key thing is really focusing on the audit side of it, and we've heard a few mentions in earlier as to the sorts of things that you should be looking for, and what I'm expecting to see, just based on how regulators are talking about this, is that we will see more defined legislation on clarity of the audit. So regardless of the architecture or the data you use, how you actually prove that you've created a system that you've mitigated bias as much as possible. I think accepting that it's going to be a practical impossibility to remove it completely will need to be part of any validation of any AI technology going forward.
Yeah, absolutely. Guys, we're running out of time. There is one last question from the audience that I would like to ask you all, and let's see if we finish this event with an optimistic or not or a pessimistic scenario. This is a question from Emily. She's asking as a student that she's witnessing the integration of AI into the financial services, and is asking herself, how can we ensure that LLMs enhance learning and career opportunities without replacing entry-level roles that are critical for skill development? I have my opinion. I will give it in a while, but I will really appreciate to hear from you guys that you are working with the industry, with the tech industry, much more closer than myself.
That touched on this in my original segment. I'll kind of circle back to tell you how we address that. A lot of it is training. There are, as we have these tools and use them, what we're trying to reduce here is data entry, the moving of data by a human from one system to another, from one document to a spreadsheet, et cetera. That's the kind of stuff that we want AI and LLMs to do for us. What we don't want, and that gets us to the starting line. So our entry-level people, we still train them on the different types of documents. We still train them on what those documents mean, on structure itself, and all of those concepts. And all this does basically is save them some data entry time in the beginning. And then we still have them do the analysis. And then we work with them to either confirm or correct that analysis. And so for them, we have found at least that it's a little bit more engaging and meaningful, that they're, spending more time on that analysis and more time in training and learning the substantive work that we do, and the risk tolerance that we have, and that kind of work, rather than getting the information to a point where it can be analyzed. So it's that first point that we're trying to eliminate here, not the analysis itself, because it's a very common concern. But what we want to do is avoid burnout and avoid having very smart people come in and do this repetitive work where they feel like they're not actually a part of the process, where they feel like they're not doing the analysis. And we work with them on that, and it frees up more of our time with our using these tools for reporting to our oversight committees and, extrapolating data different kinds of ways faster, that gives us more time to train them as well. So from my perspective, that's how I would answer that question.
Yeah, building on what Kay already said, and I added, I talked about this in the beginning of my remarks as well. This is something that we're actively working on right now. Essentially what we're doing is where we do identify that automation through AI is going to eliminate a task that we previously used for training. We're just looking for an alternative way to train somebody in that area, and leveraging, just as Kay said, understanding that this is giving us more time to potentially add in some more engaging or other type of training that will, still give them the opportunity to grow within our organization. But this is something that we are keenly aware of. And, when we make a determination of what types of AI tools to bring in, we do think through, is this taking away an opportunity for our junior staff to learn kind of the ways of our agency?
Fantastic. Well, guys, I want to give my opinion as well to Emily about this. This is how I see at least the consultancy environment, or the market research environment. And the thing here is to question what are those critical for development skills, critical skills for development that you are that you are thinking about. And in terms of market research and research or applied research in general, what I can say, and this is what the companies are asking us less now with AI, is that having the data is not an asset anymore. Before was like, all right, so you are the guy specialized in, I don't know, RTPs, in acquiring. You are the guy specialized in financial inclusion or whatever. So you know where that data is, and you know where to find it, and you know how to put everything in order, right? So, but that asset is it's kind of losing price. So my vision of the future is that and this is positive in my own opinion, because the entry level will spend much more time learning what a critical skill really is, at least in market research, which is connecting the dots and having your critical thinking very, very, very strong, than looking for information, looking for sources, or again, selling the data to the companies. That is not an asset anymore. So these critical skills for development, I think that they are transforming themselves, and in the present, not in the future, it will provide room for getting soft skills, which are much more valuable, at least in this industry, than and critical analysis skills, than just managing data or reading skills. So Emily, I reckon that you can be optimistic for the future, and I hope that this panel has given you some light. And to all of you, thank you so much to all of the audience, and to all of our speakers for their insightful contributions. We hope that today's panel has sparked ideas, conversations that you will continue in your organizations, communities, or in your careers. On behalf of World Salon, thank you again for joining us, and we look forward to seeing you at future events. Right? Have a great evening.